Today, you will learn how to trade head and shoulders pattern with stochastic RSI and flag patterns. I've been using this strategy for so long, one of the most simple and effective strategies to use. We will cover what is the head and shoulder pattern, meaning of the head and shoulder pattern, structure and types of head and shoulders, advantages and disadvantages, 3 steps ultimate head and shoulders pattern trading strategy, and finally the examples. Hello friends, hope you're doing great. Let's learn a special head and shoulders trading technique with stock RSI and flag patterns. I've made everything quite clear and simple for you. We will go over everything step by step again. If you're ready, let's start. Okay people, well, what is a head and shoulders pattern? Just like double bottoms and tops, head and shoulders are also a reversal pattern that happens to have head and shoulder shape. I do not know who named this pattern. However, in reality, there is no such a thing as a head and shoulders pattern. All is happening here, a market structure change. That's it, but nothing else. I want to repeat this a million times. Forget shapes and patterns. Focus on what this chart and price are telling you. Just speak to charts like your friend. Ask to chart what is happening. What's happening is actually clear. A powerful market supported by buyers, forming an uptrend, and keep forming higher highs and higher lows. Each time the bulls push the securities price up. However, one point in time, buyers started to get exhausted. This is generally a phase of greed, which is the last attempt of buyers to push the prices with FOMO. Sometimes it works, sometimes it won't, and this will form first lower high. Then this chart starts to speak to me. Buyers lose control and sellers gain power. That moment I understand that this could be an ignition of a downtrend or heavy selling, because the market structure is changing from uptrend to downtrend. If you flip everything, you have the inverse head and shoulders pattern. This time, sellers get exhausted and buyers step in to push the price up. You have to always keep watching these swings. Let's talk about the structure of the head and shoulders pattern. There are 3 main points to focus on: head, shoulders, and the neckline. Head is the peak point of this pattern, the ultimate exhaustion moment of buyers or sellers, depends on if the pattern is inverse or not. Shoulders are quite simple to identify, just like a human body, head and the shoulders. There is the neckline, which is quite critical for traders. This is where we decide our next steps. Just draw a trend line that connects the bottoms of 2 shoulders. I used to get this question a lot. Is this a proper head and shoulders or not? Beginner traders always try to draw perfect shapes or 90-degree lines and so on. My answer is quite straightforward. Is the market structure changing from higher highs to lower highs or vice versa? Then that is a good enough signal for me. So what I mean is you will see so many weird shapes of head and shoulder patterns on your charts. Think of it as metrics. Look beyond the patterns and shapes. Just keep looking for the price and the market structure. As usual, I also use Heikin Ashi a lot with this pattern, because it really helps me to identify the patterns in one look. So simple to my eyes. I always use multiple charts while I trade, and one of them generally stays as a Heikin Ashi chart, so I can easily see the market structures or chart patterns. Advantages. 1. It is one of the most common patterns in the world, a simple way of understanding the price action. Also, identifying the head and shoulders is quite easy with Heikin Ashi, so you can quickly scan charts with it or use a screener service. 2. It's an easy way of confirming a market structure change. You can easily determine the shift from higher highs to lower highs, or vice versa. So a good way to determine the trend change, and it allows us to decide about our positions to take profit or not. 3. Easy to measure taking profit points. Just draw a line from the neckline to the peak point of the head. That's the length of possible profit to make. This will not work all the time. However, it will be a guide for us. But how I trade this pattern is quite different. You will see it soon. Disadvantages. 1. Okay, a head and shoulders pattern could quickly turn to a double bottom or double tops. So market structure change could be fake, and the previous trend may continue. When you see a new lower high, it does not mean that trend is certain to change. 2. Placing a stop loss order with the head and shoulders is quite tricky, because the risk you are taking could be quite high. You should be really careful where you are placing your stop loss orders. 3. Fake breakouts from the neckline. I have witnessed an extremely high amount of fake breakouts with the head and shoulders pattern. If you're scalping with the head and shoulders, you can ride the quick breakouts. But if you are swing trading, it makes you lose money. Time frames. Okay, this is another one of the universal time frame patterns. It can be used by scalpers to investors. You can basically use it with any common time frames: 5 minutes, 15 minutes, or 30 minutes for quick gains in and out. 1 hour, 4 hours, 1 day for swing trades. However, if you use lower time frames like 5 minutes or 15 minutes, noise increases and accuracy decreases. So if you're scalping with a 1 minute time frame, you have to be really careful, because the 1 minute scalping world is entirely another world of trading. Now, how to trade head and shoulders pattern? To be honest, I have a unique way of trading head and shoulders, or simply say market structure change. Why? Because on this channel, I'm talking about what is really working for me, tested strategies. Step 1. Confirm head and shoulder. My suggestion is to use a scanner to detect this pattern if your broker software supports it. Or simply use Heikin Ashi to detect it just like me if you are using multiple charts. Step 2. Confirm stock RSI crossover on the right shoulder. Well, this is actually critical for me. A change in stock RSI over or below 50 lines helped me so much to support my trades for years. It just works and really helpful. However, this is an optional step, but I always check it. Step 3. Trade bull or bear flags. Well, this is where I mostly differ from other traders. I do not trade the neckline breakouts. I just use the neckline breakouts to confirm this is a tradable security. Instead, I trade the bull or bear flags, which starts with the right shoulder. We will talk about this in the example right now. Okay, let's check out this example step by step. If you trade inverse head and shoulders, it's exactly the same. Just flip everything. Step 1. Confirm head and shoulders. As you can see on the chart, buyers in control of the price action with this uptrend keep making higher highs and higher lows. However, at one point in time, buyers are having a hard time making a new higher high, and it turns to a lower high. This is where sellers say stop and enough of the bulls. And then they start to push the price down. Finally, our head, shoulders and neckline appears, which is the first confirmation of trend change. Step 2. Confirm stock RSI. Around the peak point of the right shoulder, my eyes are searching for stock RSI crossover over the 50 line. This step is optional. But when I see this, I understand that sellers are about to take control and push the price down. So I can trade many bear flags on the way. Step 3. Finally trading bull or bear flags. If you trade normal head and shoulder, you will trade bear flags. If you trade inverse head and shoulders, you will trade bull flags. Quite simple actually. The trick is this. Flag patterns have poles and flags. The moment I see the neckline breakout, I draw the pole which starts from the peak point of the right shoulder. Then I wait for the flag shape to appear. A flag is simply a pullback. My entry is simple. First candlestick that beats the low of pullback breakout candle. If you trade the bull flags, your entry candlestick should beat the high of the pullback breakout candlestick. Now, unlike other traders, I do not place my stop loss order at the top of the head or shoulder. Please look at this risk. It is way too big of a risk. Instead, I focus on the flag pattern and place my stop at the bottom of the pullback. Trading flag pattern is quite simple, as you may see. My risks are reduced with a tighter stop loss. Identifying take profit point is quite easy. As with any other flag pattern, it has the same length as the pole. And it's done. As you can see, very simple way to trade with reduced risks. Okay folks, I hope that you can use this head and shoulders pattern strategy easily. I've tested and used this method so many times. This is what I do in my day or swing trading life with stocks and crypto futures. Would you like to subscribe to the channel and help me to grow it? Thank you, take care and see you soon.